Hi, I'm Dan Pilla. I'm a tax litigation consultant and author of 14 books on successful methods of dealing with the IRS. And today we're talking about the 5 most important things to do before April 15th. And we're up to point number 2 here with this video. Point number 2 is based on a question that I'm asked all the time this time of the year, and that is, Dan, what can I do to cut my taxes for last year? Well, here we are. We're in the middle of February, end of February 2016. 2015 is dead and gone. There's next to nothing you can do to cut your taxes for 2015 because to get a tax break during the year in question, for the most part, you have to incur the expense during the year in question. But there is one exception to that for most people that are listening to us here today, and that is you can contribute to either a new or an existing IRA, and by contributing to a new or existing IRA before April 15th of 2016, you can actually designate that contribution to apply to 2015. So even though 2015 is dead and gone, you can still cut your taxes for 2015 by contributing to an IRA before the due date of the tax return. Now, this is an advantage for a number of people, especially if you're going to owe the IRS a little bit of money that you frankly just as soon not have to pay to the IRS. If you make a contribution to your IRA, you cut your taxes, and guess what? You still get the money. It's still your money. For example, if you're married filing jointly, and the two of you, yourself and your spouse, make a contribution of, let's say, $10,000 to your IRA. Of course, there's limits on the contribution amount, so you're going to want to check the IRS's rules on this for sure. But let's just say you make a $10,000 contribution between you and your spouse to a new or existing IRA. Let's also say, for example, that you're in that your effective tax rate between federal and state taxes, you're paying an effective tax rate of 35%. By making a contribution to a new or existing IRA of $10,000, you actually cut your tax liability by $3,500, and you still have the $10,000 in your own IRA account, and now it's earning interest for you, or it's earning dividends, or it's growing in some way, and is available for you and your family when you need the money at retirement. And so this is a tremendous way to both cut your tax liability, cut your tax liability for a prior year, and build wealth in the process. And there's another little benefit to this whole process, and that is when you reduce your tax liability, you can actually adjust your withholding. If you're a wage earner, you can adjust your withholding to take account for the fact that you've made this contribution to an IRA, and that actually increases your take-home pay. So you get quite a number of benefits when you do this, but the key is to act now. If you want it to apply to 2015, you've got to act before April 15th of 2016, and that is the only way that you can now cut your taxes for the previous tax year. So, I'm Dan Pilla. You have been listening to my 5 most important things to do before April 15th. This has been number 2, to contribute to a new or existing IRA. And don't forget my book, How to Win Your Tax Audit. This is going to help you with any kind of audit problem you're dealing with. If you're faced with the Internal Revenue Service, this is the most comprehensive discussion of the tax audit process that's ever been written. How to Win Your Tax Audit. Get it now.